Hello, this is Wes Bridle, and this is another Kingdom Calling Economic Update. We are in the second part of a 3-video series this week. In the first video we talked about the world economic situation, the countries that are making news and what's happening in the world economy. This one we're going to talk about what's happened in the U.S. economy over the last couple of weeks. I'm going to focus on some of the things that you're not seeing in the mainstream media. It's easy for you to flip on your TV and catch what's being touted as good news. I'm going to kind of show you a little bit underneath what's happening just in the last 2 weeks. And in the next video, we're going to look at different things that are happening over the last couple of weeks that involve the strength or weakness of the U.S. dollar and gold and silver, what's happening in those markets. All of this is just what's happening in the last 2 weeks. So to get a big picture view, you really need to watch The Coming Storm, which is a live event we did in November, which talks about exactly what's going to be happening in our economy over the next few years. There should be a link right near this video to watch that for free, and I highly recommend you do that. And so let's jump into it. There's been a lot of talks about a value-added tax coming to America. The Obama administration really seems to like this. They're floating the idea a lot. The reason for this is they absolutely have to spend and spend and spend. They refuse to cut down on their spending. But they're already increasing taxes considerably on the U.S. people, and they're getting to the point where it's hard to do that anymore. But they still want more. So something that Europe has done, which a lot of people in the current administration like the idea of, is adding a value-added tax, which is a tax that you never actually see that you're paying as a consumer. It's when products move between different manufacturers before it gets to the consumer. And the idea would be to add about 20% to the cost of everything you buy. So it would be an immediate inflation of 20% to everything. It's generally sold as, oh, it's not a tax on you, it's a tax on these evil businesses. But of course, the businesses have to pass along their cost to you. So if there's a new 20% tax built in there, the cost of everything to you would go up 20%. This would be devastating to our economy, but again, there's certain people that like the idea of that because it just would, over the long run, it doesn't even increase revenue to the government because it slows down the economy so much that there's less taxes paid. But in the very short term, it does increase revenue to the government, and so they like that idea. Anyways, it's not happened yet, but there's a lot of talk about that, so look for that in the future. Unemployment, there are a number of states borrowing from the Fed has jumped 50%, from 22 to 33. These states cannot make their unemployment paychecks that their citizens need, so they're borrowing from the Fed. The amount that states are borrowing from the Fed has jumped recently from $19 billion up to $38.5 billion. So massive amounts of money the states are having to borrow from the federal government. Foreclosures were at a record high in March, up 19% over February. The first quarter of 2010 was up 16% over the first quarter of 2009. So massive foreclosure numbers. According to Zillow, 1/5 or 20% of all U.S. mortgages are underwater. They owe more than their house is worth. As far as the idea of a market crash coming soon, Jeff Clark is a trader that I follow. He's got 30 market indicators. Every single one of them is screaming sell. He says he's only seen this 2 other times in history. One was in 1987, one was in early 2000. In both cases, he said it was actually a couple months before the market finally crashed, but of course there were huge crashes in those 2 years. So, you know, that's what the market is saying right now. There were so many stories like this, I'm not going to include them all. I mean, he's got 30 indicators, so I think that covers it. But I read a bunch of stories I've pinged out on my Twitter feed at Wes Bridle, a bunch of these kind of stories. All 10 subsectors of the S&P are overbought. So everything in the market is screaming that you need to sell because the market's going to crash. On the flip side, I think there's more and more credibility to TrimTab's research several months back that showed the Federal Reserve was probably propping up the stock market because there are so many signs like this as the market should fall and it continues to go up. The Fed has talked before about plunge protection team and things like that, which would mean in their situation that they feel like it's best for the overall economy not to rock the boat and to kind of push things up. We know they're out there buying all sorts of mortgages and weird things, so it wouldn't be shocking that they would be buying equities. I don't know if they're doing that or not, but if they are, then it could go on. The market could keep going higher and higher. It's very strange how it continues to go up and up and up almost every single day. That's just not the way markets usually go. They usually have to breathe and then go up some more, but that's not how it's acting right now. Big hurricanes are predicted for the summer. I saw on some report. If that happens, of course, that usually shoots up the price of oil, so something to be aware of, which of course is generally devastating for the economy. On the same track, I don't think I've got it in here, but more and more it's looking like potential war in the Middle East. My guess is we're going to see that this year. I don't know. Obviously, that's a guess, but if we see that again, we see oil prices spike, we see that's really debilitating to the economy. Goldman, the big news last week, was accused of fraud. Of course, they've been committing fraud all over the place. The SEC has finally accused them of it, along with John Paulson, in the way they were packaging mortgage-backed securities, and even though they knew that they would be poor securities, packaging them as AAA securities. That's an interesting thing and had a huge effect on the market on Friday. Just kind of random news, Los Angeles, the mayor came out and said they were going to run out of money on May 5th. So again, just signs of the difficulties out there. Effective tax rates, I saw a study, the effective tax rates on small businesses are jumping from an estimated 40 to 50%. So this is the driver of the economy, this is the driver of new jobs in the economy, and so by adding all these new little taxes, even the healthcare thing had new taxes on these people. When you add up all these new taxes, it makes them harder, for one, to employ new people, makes them scareder about planning business in the future. So if you want to see a double dip recession in the economy, that's an excellent way to do it, and that's what we've been doing. One of the ways at the end of this year, taxes are set to rise. It's been set for a long time. There's no plan on changing that as well. Insider selling is still at an extreme level. Insiders of corporations, CEOs of companies, people like that, who really know their company better than anyone, are selling at extreme levels. They're not buying, they're selling their stock like crazy where the stock market is today. The SEC has decided to look into high-frequency traders. This is interesting. I didn't know the stat, but 60% of volume on U.S. stock markets is high-frequency traders. It means computer algorithms that are trading based on a formula that's put in the computer. 60% of all U.S. stock trades are based on that. To me, that is a good indicator of something that could make for a really hard fall when the market were to fall, because so much of it is computer driven. So I found that interesting. The SEC is looking into it because they see, I guess, the same thing, and they're wanting a little more information on being able to track that. Corporate profits are up, so that's part of the good news that's out there. However, if you look deeper into it, most of the profits are from the financial sector by far, and so yeah, they're being funneled massive amounts of money by the government. They're given this money at super low interest rates, practically free. They're able to turn around and lend it back to the government at a huge spread. And so are they making a lot of money? Of course they're making a lot of money. Is that doing anything for the overall economy? No, it's not. So that's something to look at behind the numbers in the earnings reports that you're seeing coming out. It was revealed that in a recent report that big banks are masking their risk levels. At the end of every quarter, they have to report their financials every quarter, and at the end of the quarter what they're doing is getting rid of certain loans so that their books look safer. And then as soon as the quarter end is over and the new quarter started, they ramp up their risk levels again. So they're nothing illegal what they're doing, but they're trying to mask from the public what they are doing. So something to be aware of. And finally, Greenspan warns that the economic impact of the new healthcare reform could be disastrous. He said he assumes it will cost far more than they're saying it will cost, and that the effect on the economy will be disastrous. So something to keep an eye on. Thank you for watching this economic update. With the next one, we're going to go into issues facing the U.S. dollar. There's some serious things going on out there, as well as issues in the gold and silver market over the last couple weeks. If you haven't seen the Coming Storm video, again, there's a link right next to this video where you can watch that for free and get a big picture of what we're about to go through. Thanks, and God bless you.